Today I wanted to have a look at a few charts, and we're going to start with the S&P 500. Now you can see since about the middle of October we've been in a clear uptrend, and that uptrend is still not been breached. We can see we had it up, down, and the trends, they move up and down, but they still have an overall trend which is higher, which is what we are still in now. And you can see wave 4 came all the way down to the trend line, didn't breach the trend line. You can see it just touched the trend line almost to the penny, and now it looks like we are just going to start this new uptrend higher. And if it is a true wave 5, we should get up to about maybe 4,800 in the S&P 500. So that would be somewhat of a substantial move. Now, if I pull up Apple, the first thing we see is that the stock has had a pretty rough few weeks here. But that looks like it is likely going to be coming to an end. We can see we have bullish divergence here. We have a lower low in the stock price, and yet in the RSI we have a higher low. So that's a bullish divergence. It's a strong bullish indicator. And when you mix this with the fact that we have the 200-day moving average here, the stock didn't quite touch it, but it got very close. So that's going to be substantial support. So with the fact that we have the bullish divergence and the 200-day support, that's going to be a good indication that the stock goes up from here. Next up, we have GDX, which is the gold miners index. And just like we've seen in the previous chart, we have a lower stock price and a higher RSI over the same time span. So again, we have some bullish divergence, and it's not too pronounced in the RSI, but you can see in the MACD a little bit more, and the statistic indicator as well. So that is another bullish indicator that the market is likely going to move higher. And the final chart I'd like to look at today is the UPRO chart. And here we can see a head and shoulders pattern that is clearly formed. We got the left shoulder, the head, and the right shoulder, and the neckline here. And the stock has broken down below the neckline, but it has to contend with the 200-day moving average. And you can see here it did breach it just slightly, but has since bounced higher. And now we're kind of in this no man's land, right? We have the neckline, which was going to act as support, but now since the stock is below that, it's now going to act as resistance, and the 200-day is going to act as support. So we should bounce kind of in this little area right now until the stock busts out one way or the other. Now, based on the previous charts, it looks like overall the kind of theme here is that stocks are going to go higher. So I'm betting that this is going to break. Stock's going to move over this neckline, and it's going to shoot higher. And we are moving in on several bullish positions, but these are a few charts that kind of show us that the stock market is likely going to be up from here.